The way you make money is when you see a digital trend. Everybody needs it. Nobody can stop it, but nearly everybody disagrees with you. Well, that benefit accrued 99%, right? That's a $200 billion improvement in the market cap of Bitcoin. And of the 200 billion, 99% of the 200 billion accrued to people that don't even own the ETF, right? So it's accelerating, institutional adoption, and it's just accelerating Bitcoin adoption and empowering everybody else in the ecosystem to do all the things that they want to do. In an economy, energy is money, right? Energy is profit. Eventually, everybody's going to want this. Eventually, everybody's going to have a computer in their pocket, and it's pretty clear it's kind of a winner-take-all thing. Apple ended up generating all the profit in the mobile phone industry, and everybody else lost money to compete with them. If you go back and read investment research on Amazon, everybody hated it. You know what they said? They said, oh, this is an awful retail company. They don't make any money. Well, they kept not making any money while they sucked the entire market up, and now there's Amazon, Walmart, and everybody else is bankrupt. What was Bitcoin's number one liability coming into 2024? The number one risk factor of Bitcoin coming into 2024 was a government would ban it. But see what just happened in January? The opposite, right? So most of the FUD around Bitcoin is, oh yeah, it's too good to be true. And because it's too good to be true, the government's going to hate that you bought it and they're going to take it away from you. And with the approval of these ETFs, it was the government of the most powerful country in the world, the United States, which is actually the leader of financial regulation. I mean, whatever the U.S. does will influence Singapore, Australia, New Zealand, all of the EU, even Hong Kong, even China for that matter, and all of South America and all the African regulators. So everyone's looking to what happens in the United States. This was a very powerful signal. So that was a bullish development. There was a little bit of weakness following, and I think that's fairly well understood as a couple of factors. First of all, a lot of capital rebalancing. There was capital sitting in the futures, BITO, and other Bitcoin futures because institutional investors don't have crypto accounts. They can't trade with most of the crypto exchanges, so they had to buy the futures. And the cost of rolling a Bitcoin position in the futures is like 10%. At the end of the day, they're just transient factors, right? If you're buying Bitcoin with a short time horizon for responsible investors, 4 years. So if you're buying Bitcoin with a 4-year time horizon, this shouldn't matter to you at all. And of course, the right time horizon is 40 years. It's like your useful investment life, maybe. And I mean, the inspired one is 400 years, right? If you think out 400 years, you'll do brilliant things, right? If you think out 40 years, you'll probably make the right decision. If you think out, 10 to 20 years, you won't have anxiety. 4 years is the minimum. But, people that are trading with 4 weeks and 4 months, right, they're just going to make awful decisions. They're the ones that probably panic sold it when it traded to 39,000, or they panic sold it when it traded to 16,000 or 20,000, 12 to 16 months ago. And they probably bought it for the wrong reason. But ultimately, what we've seen is Bitcoin came public. It's clear that you're going to be able to own this as property for the long term. It's clear that this is going to catalyze a bunch of very positive behavior by other regulators in the world. It's going to accelerate institutional adoption. It's going to embolden the political supporters of Bitcoin. It's going to create a marketing war between various Wall Street firms. We see that going on right now. And it's going to strengthen and empower all of the OG Bitcoin holders. People talk about, what has BlackRock bought $6 billion of Bitcoin and all these new ETFs. What have they bought? Like 1% of the supply. Well, that means 99% of the supply and 99% of the beneficiaries so far are the non-ETF holders. right? I mean, there's 100x as much. If Bitcoin's up $10,000 a coin since this happened, well, that benefit accrued 99%, right? That's a $200 billion improvement in the market cap of Bitcoin. And of the 200 billion, 99% of the 200 billion accrued to people that don't even own the ETF, right? So it's accelerating, institutional adoption, and it's just accelerating Bitcoin adoption and empowering everybody else in the ecosystem to do all the things that they want to do. Well, the crystallization in physics, it's where you're collapsing to a low energy state. You're going from water vapor or steam to water to ice. And at each step, energy gets given off, right? And it's a basic thermodynamic idea, energy, heat. But, in an economy, energy is money, right? Energy is profit. So when we collapse, when we stopped manufacturing film and cameras and recorders, and phonograph records and CVDs and DVDs and whatever you manufacture, when we stopped that, we reclaimed a huge amount of energy and that converted to money. And that accrued to the people most of it accrued to the people that use the Apple product. That's why they became the most famous brand, right? I mean, everybody knows it's kind of cool to have 500,000 photos on your iPhone, right? It's like, and they're all there. So it accrued to them, but a small portion of it accrued to Apple, and that went to their shareholders, and that made them the most valuable company in the world. So in 2010, 2011, I looked at it and I said, well, eventually everybody's going to want this. Eventually everybody's going to have a computer in their pocket, and it's pretty clear it's kind of a winner-take-all thing. Apple ended up generating all the profit in the mobile phone industry, and everybody else lost money to compete with them. What I say is the way you make money is when you see a digital trend. Everybody needs it. Nobody can stop it. But nearly everybody disagrees with you. Right? It's like if the majority of people disagree with you, they don't understand it, but nobody can stop it, but everybody needs it. That describes Amazon, right? If you go back and read investment research on Amazon, everybody hated it. You know what they said? They said, oh, this is an awful retail company. They don't make any money. Well, they kept not making any money while they sucked the entire market up. And now there's Amazon, Walmart, and everybody else is bankrupt. Who doesn't want to have everything they want delivered to their door in 1 hour for free? Who doesn't want that? Just like with Google, I want to go and I ask a question, I want the answer instantly, quick, and I want every book and every piece of information that the human race has at my fingertips instantly. Well, who doesn't want that? Everybody wants that. How about YouTube? Okay, well, it's everything you want to know for free instantly, everywhere in the world. Okay, so everybody's eventually going to need it. Billions, there's YouTube videos. They've got 9 billion views, on the video, right? So everybody wants it. Nobody can stop it. But then again, everybody thought it was a stupid idea, right? They didn't really get it. And the same was true with Apple. It's like people just didn't get it. And I'm like, well, a device that basically does everything you want it to do in your pocket that's, 1 million times more powerful than the computer in the space shuttle. And everybody said, well, it's too expensive. Remember they say it's too, you could buy Nokia phones for $30. And the iPhone came out and it was $500. And the people made fun of it. It's 10 times as expensive. Well, what happened next? Well, Apple raised the price to $750, and the other phones were $20. And then Apple now sells iPhones for $1,500. So Apple keeps raising the price of the iPhone, and all these other cheap phones went to zero because at the end of the day, the point was that it's what people want. The key point I'd make is the time to buy them was when everybody laughed at you. Back in 2010 to 2012, most people would have laughed at you. with regard to Apple, they would laugh. They would say, well, it's too expensive and Nokia's got the market or Motorola this or something. Or they'll never, the telephone companies will control the business. Or they would say, well, the stock is too high, so you should sell the stock because here's a classic one. It was 5% of my portfolio. The stock doubled. Now it's 10% of my portfolio. But my investor mandate is I never want to have any stock more than 5% of my portfolio. So every time Apple doubles, the gigabrains sell half their position. And so then it doubles again, so they sell half again. So then it doubles again, so they sell half again. So then it doubles again, so they sell half again. So after 10 years, they've got a little bit of Apple stock, and they bought all of the computer companies that went bankrupt. So here's what happens next. You give them $1 million at 2 and 20, and if you actually understand statistics or financial modeling, and then you just take that $1 million and invest it in the S&P index, and the S&P were to go up 10% a year, they get 4% a year, and you get the other 6%. Which means that you just gave them 40% of your money. You had $1 million and you just gave them $400,000 and you got the other $600,000 back. And so if you ask yourself the question, who are the people telling you diversify? It's the people selling you the diversified funds, or they hold themselves out as these brilliant diversifiers. And what they're really doing is taking all your money, right? And on the other hand, name a billionaire that got rich by diversifying. Jeff Bezos didn't get rich by diversifying. Mark Zuckerberg didn't get rich by diversifying. Steve Ballmer didn't get rich by diversifying. Like Steve Jobs didn't get rich by diversifying. Pretty much, Elon Musk didn't get rich by diversifying, right? You could go on, and like, let's take even Warren Buffett. The most profitable trade Warren Buffett ever made?
Apple.
He bought Apple stock. I think that people are misled and they don't think about it much, right? If everything, by the way, it's no good to diversify if everything's correlated. For example, you could buy every possible company in Nigeria, but if they're all correlated to the Nigerian naira and the currency collapses, what good was diversification? So you really have to think about this. It's like, I wouldn't say that there aren't successful people that happen to be diversified. I would just say that oftentimes this is a mantra that's brainlessly recited to give people an excuse to not think. And it's like, well, I got to diversify, so I own 37 different things. So that means you don't really understand any of the 37 things you own. And I would advocate you should spend 1,000 hours obsessing over each thing you own. And if you're the kind of person that can spend 5,000 hours and spend 1,000 hours on each of 5 things, then, good for you. Maybe you'll end up owning Apple, Amazon, Facebook, Google, right? And then maybe you'll say all 4 worked. And that's not so bad. Yeah, Bitcoin's the next thing. But Bitcoin is like, I've said it before, it's kind of like Apple or Google in 2010. Misunderstood. Everybody needs them. Nobody can stop them. But it's a bit better, because Bitcoin is an asset class, and so its target use case is store of value for the civilization, which means that there's no reason why it doesn't subsume gold, and gold's worth 10 trillion as a store of value. Why can't it subsume real estate at 100 trillion? Why can't it subsume all store of value property, which gets you to 200, 300, 400 trillion? And the more valuable it gets, the more useful it gets, right?